G'day ladies and gentlemen, welcome back to another Bitcoin video. Today we have seen, and in the last probably 6, 7 or 8 hours, we've seen a big breakdown of around 1,000 USD plus on Bitcoin from the ascending wedge formation. After we look into that, we need to look into short-term price action, quickly jump into the weekly chart, and then we need to look into some on-chain data, including whale transactions, Bitcoin active addresses, and Bitcoin new addresses. A lot of people are raising a lot of concerns recently about how whales aren't buying Bitcoin and that means Velo's not in. I want to quickly kind of go over those claims and why they're not as strong as some people think, and we'll discuss that in just a second here. But we'll start out here with the short-term charts. I want to quickly go into it and say Bitcoin has broken down on the daily chart. We've seen a breakdown from the RSI triangle formation. We've seen a breakdown from the ascending wedge formation ending with this dashed yellow line, and we're currently seeing support in that 22.3k region roughly, which is where we found daily candle support on a couple of occasions back here in September 2022 and also during the peaks here in July. And of course over here in recently in January, we found support in this region as well. So we're on support now. We've broken down. We've had a massive breakdown happen very fast. Everyone was thinking, I had a few people in the community discussion group saying, oh, it was too fast. It's suspicious. I assure you that was not a suspicious breakdown. That was a regular breakdown. No one really gets suspicious when it moves up at this speed. There's no reason to get suspicious when it moves down. Yes, it was quick, but at the end of the day, we were seeing lengthy consolidation in a region in which we were overvalued for quite a long period of time. We had a bear flag formation, as you can see. We moved downwards. We had a leg downwards, and we found support on the top, and we jumped into the bear flag formation, bounced around for a bit. We dropped downwards. It's very basic price action. It's very natural price action. There's nothing suspicious about that. And I do believe we'll see further downside price action. I think that the next zone we need to test is down here at around 22k flat. We haven't got near that zone at this point in time. The reason why I'm looking at 22k is that there's a chance that this entire structure could be labeled ascending channel formation. If we delete the wedge lines, you can see it looks like almost like an ascending broadening channel, something like that. And we could be seeing that support hold up and then potentially another swing to the upside before a further rejection or maybe a break to the upside. We have to wait and see. At this point in time, 22k is the support zone I'm seeing us going to next on Bitcoin, and that is supported thoroughly on the 4-hourly chart by the volume and by the RSI breaking down on the daily chart. Ultimately, if I had to guess, given the fact that we've broken down from an RSI triangle on the daily that was been forming since like 3 months ago, I would guess we go lower than 22k to begin with. I think that we will probably trend downwards and ultimately retest 21.6k, maybe even 19.5k or 20k. It would make sense. We looked into it yesterday. And we said, we're in a Wyckoff accumulation pattern for sure. And we said that, hey, look, just because we're in Wyckoff accumulation doesn't mean we need to see new lows, because there's two types of Wyckoff accumulation. There's the one where we're up here and we go downwards to new lows, in which case we do that and we bottom out in June. And then there's the one on the right-hand side, which I think we're in which case we'd go downwards and test something like 19, 20k and then come back up later and break to the upside. That's probably the one I'd lean towards. So realistically, a retest of 19k, 20k wouldn't be too far off the ball, considering as well we've got the bull market support band in that region between around 21k and around 19.5k. And we've got the 200-day SMA in that region around 19.8k. So as I said just then, 19, 20k could go downwards. Nothing to be concerned about. If we go down to that level, it should be all good. That's basically the short-term charts. We've seen a breakdown. It probably will continue downwards a bit more. As of right now in the short term, we're looking at 22k flat for immediate support, but I would expect that to break to the downside as well. I think we'll see a proper correction here. Bitcoin is in a pretty high region. We moved up 65% at the end of the day without any correction exceeding 10%. So we moved up very quickly, and we need to see a bit of a retracement here. It's completely natural price action, nothing to be overly concerned about. So long as we're still bouncing between the 200-week SMA and the bull market support band, we could actually see consolidation for the entirety of the month of March. It wouldn't surprise me at all. And by consolidation, I mean consolidation, above 19k, below 25k. Could see it for the entirety of March for sure, and then potentially make a move to the upside in April. In fact, that's probably what I deem to be a little bit more likely. So that's kind of a short-term analysis. That's all there really is to look from a short-term point of view. Now we can move into kind of a longer-term point of view, and we can look into what I said before about on-chain data. People are getting very concerned about whales not buying Bitcoin. I'm a believer that the bottom is in. I think the bottom is in as per the 4-year cycle theory and various other reasons that I've listed in previous videos. But a lot of people disagree with me on that. They say, oh, well, the bottom's not in because whales aren't buying, and whales didn't buy the low. That's why the bottom's not in. I will remind you this, okay? Whale transactions are not the only thing that matters. Everyone knows that, but people need to get reminded sometimes. People have this idea that whales, obviously they have a significant amount of control in the market, otherwise you wouldn't see things like Wyckoff playing out, but people have this idea that whales know exactly where the low is and know exactly where the high is. It simply doesn't really work like that. I think you guys need to remember that TA is really what determines where the tops and bottoms is, not whales. Whales don't necessarily follow TA. They also are subject to the macroeconomy, because you have to think about this. Who are the whales? The whales aren't random dudes like me sitting on their computer with $50 million, right? More like $500 million. The whales are corporations. The whales are people with fingers in lots of pies. The whales are people that get hit pretty hard during a recession and don't really have the time or capital to start spending money on the Bitcoin lows during an economic recession, right? That's who the whales are. So the fact is this, we've never seen how whales react to a recession in relation to Bitcoin. We haven't seen that before. So maybe they just won't buy the lows. Maybe they'll wait until the macroeconomy is a bit better. I think it's a little bit of a broad kind of blanket statement to make that is inherently dismissive of TA when you say, I'm just going to follow what the whales are going to do. Because it doesn't really, I don't think it's logical. I think you should follow what the charts tell you. The charts don't lie. The whales are always going to be subject to the macroeconomy. What we need to look at that is slightly more important than the whales, in my personal opinion, is how active the Bitcoin network is. How active Bitcoin is as a whole, fundamentally, right? Because that's what's going to drive whales to invest in it to begin with, right? We have new addresses on Bitcoin in an uptrend, just like we had in the last cycle. Now look at this. Okay, 2018, 2017, we saw a cyclical peak here. In 2017, in December 2017, that's when we saw the price peak. That's when we saw the maximum amount of new addresses being made. We saw a sharp downtrend, and throughout the entire bear market, a slow uptrend until the next peak on Bitcoin in 2021. We are seeing the exact same thing occur, okay? New addresses on Bitcoin saw a sharp downtrend after the bull market, and they're seeing a slow and steady uptrend throughout the entirety of this bear market. That is completely normal. It checks out entirely. Another thing we can look at is active addresses. Active addresses show no sign of decreasing. They are not in a downwards trend. They are in a sideways trend right now at one of the highest levels they've ever been at. Active addresses are stable and prominent. Bitcoin is an active network. It is not dying off. It is completely fine. All of that coupled with the fact that you got new addresses in the uptrend, active addresses in a sideways sideways trend, and the cyclical theory playing out perfectly, I think we can go ahead and say that the whale chart, what whales are doing specifically, isn't necessarily important, especially given the fact we're seeing a unique macroeconomy that we haven't seen on Bitcoin before. So we're not really necessarily sure how they're going to react. I will say this. Whale transactions might be down, but what is up significantly is micro transactions. This is transactions of retail investors. They are up significantly because retail investors are looking for a place to hide. They see inflation as a threat, and they're putting their money in Bitcoin as a kind of a segue to get away from inflation, right? A safe nest. A safety net, a safeguard to get away from inflation, get away from the traditional markets, to get away from the Federal Reserve and traditional banking and traditional finance, because they see now in this recession, they see now with 60-year high inflation, the faults of that. So yes, whale transactions might be down, but Bitcoin is actually being kind of driven by retail at this point in time, which is very promising to see. And that's exactly what you want to see, of course. Now, I don't know how long that's going to last, but I think we're proven there by the new amount of new addresses in an uptrend, even in the recession, and the amount of active addresses in a sideways trend, even in the recession, that Bitcoin is actually a pretty active network. And it's not really in a decline at all. I don't think that, again, I'll say it one more time, I don't think that whales not buying the low at significant rates is necessarily an indicator that the low is not in, right? And again, I could be completely wrong, but that's just my personal opinion. I think that the 4-year cycle theory, the TA, and the fact that Bitcoin is still active is probably more of a supported data point based on many metrics rather than just the blanket statement of the whales aren't buying. It seems a little bit of a cop-out kind of answer as to why you think Bitcoin's going to go down, in my personal opinion. So that's the Bitcoin chart. Yeah, short term looks rough. We've dropped down quite a bit. 22K is the next immediate support. We'll probably end up 20K, 20K-ish, that region, by the end of March. I do think that March will be a red month. At best, it will be a sideways month. I don't necessarily see the probability for a green March is particularly high. I think that April will be a green month. That's my view at this point in time. That's obviously subject to change if things in the charts change. But as of this point, we're still in bearish structures across the board. And we're still below resistance. So we just need to keep an eye on it and watch it and track it. And I'll be back tomorrow for another video, guys. So before we end the video, Crypto Academy, if you want to learn how to trade, want to take advantage of the course we've made here, myself and Mega Whale Crypto, you can learn how to trade. The Become a Trader 10-unit course All the information is on the website. That's if you want to learn how to chart, you want to learn how to actually activate trades, how to find trades, everything you need to know about trading is in this course. So check that out, pin comment and description. And the same thing with the BitGet exchange, 5 times lower fees than Binance, 15% trading fee discount for life for signing up using my referral link. This is the exchange you need to be on. Get off Binance, get off the major exchanges. This exchange is working its way up to be a major exchange, but I tell you right now, it abides by the fundamental values of cryptocurrency. It's non-KYC. You can enter this exchange from anywhere in the world, which is great because that's what cryptocurrency is all about. It's all about decentralization. We want to limit decentralization on exchanges as much as possible, which is something that's been quite a threat recently to crypto, with Binance blocking off futures trading from Australians, Binance blocking off futures trading from the UK. We're seeing quite a lot of limitations here. So this is the exchange for you guys. Go ahead and check it out. Pin comment description, 15% trading fee discount for life. And finally, if you're interested in the VIP group, interested in trading altcoins, we have an 81% win rate in the quarter of Q1 this year. That's from the start of the year to the current present time. We had around a 75% win rate, something like that, in Q4. All the results are posted, so go to the pin comment description, check out the results if you're interested, and then you can make a decision as to whether you want to join that group and make some money with us there in the Telegram group. So thanks for watching. Hope you enjoyed, guys, and I'll catch you in the next video.